Welcome to Cut to the Chase, where we talk about compelling legal, regulatory, and public interest information and news. Your host is Gregg Goldfarb, an attorney, entrepreneur, investor, and activist.
All right, folks, it's time for our favorite podcast, Cut to the Chase. I'm here with Ted Forman, and we are going to talk about one of the things that my mother always told me to do, which was, Greg, don't leave money on the table. I'm like, huh? Leave money on the table? I know a lot of people know about the PPP, but do you know about the ERTC? Because that could be money on the table. You're a law firm, you're a business owner, you got PPP, you think that's the end of the ballgame, there might be money for you. Open up your eyes. Ted, I need you to help the audience understand that there's money there, you can help out. Let it rip.
Sure. So thanks, Greg, for having me on. And, I think the conversation that we're having today in October of 2023 is very different than the conversation that I was having with law firms, business owners a year ago. Because a year ago, the conversation really was, yes, the ERC is a legitimate program. It's not a scam. It's out there. It's available. In the past year or so, what we call the mills, the bad actors in this industry who have the sense that they're going to make a quick buck, who are out cold calling business owners, blowing up your cell phone, TV advertisements, they have really done a good job of shedding light on the availability of the ERC program, but it's really created and it's caught the eye of the IRS. And so what I would say to you now and to the listeners at home is, yes, the ERC is a program that you should seriously consider, but as you go forward, you want to make sure that you navigate through it carefully with the right partners and have the right types of companies behind you. Not a company that's going to be off to the next newest thing 6 months from now, but you want to have an established either accounting firm, law firm, some credentialed business that's going to properly analyze your business, do the computations correctly, and most importantly, stand behind their work. So that's a long-winded answer of saying, yes, the ERC is a COVID relief program that by now most people have heard about, but you got to be very nuanced in your thinking as to how you're going to go forward with it. So,
all right, let's dispel a few myths. So my business got PPP both years it was available. I'm just assuming I don't qualify right out of the gate.
That's a myth. That's a myth. And it's a well-founded myth, because when this law was first enacted, it was one or the other. So you had to choose between PPP or ERC, but you could not do both. For obvious reasons, you're not dealing with the IRS. It was faster and easier. 99% of the businesses went right to PPP and never considered the ERC program. Now, if you fast forward a year, and this law all took place right at the time when the world shut down for COVID, March of 2020. So that was the law, March of 2020. If we fast forward 1 year, early 2021, just as the Trump administration was leaving office, the law quietly changes, and they say that even if you've gotten PPP money, you are still eligible to receive ERC funds. It largely stayed under the radar, and for multiple reasons, but people thought that the Biden administration would come out and undo what the Trump administration did on the way out. But on the contrary, they said, this is not only a good program to stimulate the economy and reward business owners for keeping their employees on during COVID. Not only did they embrace this, but they actually made it more lucrative in the 2021 year. So that in the 2020 year, you've got 3 quarters, the second, third, and fourth quarters. The 2021 year, it's the first 3 quarters that are much more lucrative in 2021. I guess the takeaway from all this, Greg, is that this is the one thing in Washington that both Republicans and Democrats agree upon, that businesses who did apply for PPP are still eligible to receive money for ERC.
All right, myth number two, my law firm stayed open. I didn't fire anybody during this time period. I'm not even sure if I lost any money. I obviously I don't qualify.
Well, that's another myth, and it doesn't mean it's a yes or no answer, because there's a couple of loaded issues in that statement. Number one, the whole purpose of this ERC program is to reimburse business owners who did keep their employees on the payroll during these COVID-related quarters that we talked about, the 6 quarters. So if you're a business who closed up shop and did not pay your employees, that's true, you are not eligible. However, if you kept your employees on the books, then you are potentially eligible. And that kind of raises the question as to the 2 ways that businesses can be eligible for the ERC program. So when you say things like, I'm not even sure if I lost money, well, yes, that's one thing to look at, but it's not the only thing.
All right, so myth number 3, well, let's see. It sounds like I'm going to have to do some kind of financial analysis of my operation. I'm going to have to pay my accountant, all this kind of stuff. And there's a good chance I'm going to end up finding out that I don't qualify and I just spent $1,500, $2,500 just to figure this out.
Well, and that is a possibility depending upon, which direction the company goes in analyzing this, because if you want to enlist your accountant to investigate it and see if your business lost money, the requisite amount of money during the COVID related periods, that's certainly one way to approach it. But there's a different analysis that falls within the temporary partial business interruption, which is more of a legal analysis that I'm sure we can get into in a moment. But there are other companies that are out there, not just your bookkeeper or accountant who's going to charge you to look at it. For example, when you hire our law firm, we do the analysis at no charge, and we reach conclusions and we make recommendations, and then the business can decide whether they want to proceed or not.
All right, so I'm just going to cut to the chase here. I'm a law firm. I'm listening to this. I'm like, sounds like I got nothing to lose. I'm just going to call up Ted. Hey, Ted, I want to hire you. Is that how it goes, basically?
Well, it starts off as easy as that, because like I said, unlike many other of these quote unquote mills who charge a large upfront fee and they take your money and they give you little in return, our law firm works on a strict contingency basis, which means that we don't take a penny from our clients until our clients actually get their money. So, I will tell you that within our law firm, we have chosen to target other law firms. And when I say target, I mean, the great majority of the businesses that we represent are lawyers themselves, because, we all understand the workings of law firms and the impact that the COVID-related closures of the courthouses had on the ability to move our cases forward. And so in my analysis, I believe those are excellent candidates to be eligible for this ERC program.
All right, so that dovetails back to the temporary clause in this relief package. And so why don't you get into that? This is basically, hey, you're a law firm, you survived, you made money, you had employees. How could I possibly qualify for this?
So let me be clear, because when it gets down to the nitty gritty of all this, what businesses want to know the answer is, how do I qualify? And so there are two ways that businesses qualify. And the first way to qualify is under what we call the revenue reduction test. And that's really more of the accounting numbers crunching analysis where you compare your revenue during the pre-COVID quarters to the affected 6 quarters that we're talking about. And if your gross revenue dropped by a certain percentage, you would qualify for that quarter as well as the next quarter. Like I said, that is more of a bookkeeping, accounting type, add the numbers, compare, the things that accountants are really good at. The things that make accountants nervous is the legal analysis. And so that's why I say we tailor our representation to law firms, because lawyers understand the legal complexities, the legal arguments that can be made. And that really is where we get into the second way to qualify, which is the temporary partial business interruption test. All right. And, it's a lot of words. And what I tell people is that this law is really as clear as mud. Because if you think about the history of the law, the world went into a frenzy in March of 2020. Congress scrambled to put this law into place. It was not well thought out. It was not detailed in its analysis. Frankly, it's poorly written. And there are no definitions as to what qualifies as a temporary partial business interruption. We've got the law that's 2 years old, maybe, that's never been tested in court. So we have really no court precedents or guidance from the court system to tell us what businesses fall within this temporary partial business interruption. Now, what I tell my lawyer friends are, this is the world that we as lawyers live in, where we work in the gray areas all day long. If everything was black and white, there would be no need for lawyers. If I knew 100% the answer to every question, there'd be no reason to have a dispute. Now, taking it one step further, however, what I do in my firm is we look at the cases and we analyze the strength of the claims that can be made as to the temporary partial business interruption test. And, some businesses are really, really strong. Other businesses are not so strong. And those are the cases that we tend to say, look, I think you're really pushing the envelope. I guess that's a long-winded way of working my way back to law firms. Because with law firms, in my opinion, those are A+ cases. And there's a reason for that, because even though the statute is poorly worded, there is a direct reference to businesses that were temporarily partially impacted by government-ordered shutdowns, affecting commerce and trade and travel, etc. But if you focus on the government-ordered shutdown, the mandate of government closures, that's what I really seize on, because when you consider that and the fact that the courthouse doors were closed across America to jury trials, in my book, that makes law firms who have more than a nominal amount of litigation within their practice A+ candidates. Because if you think about it, and most of the people who I talk to are personal injury lawyers who have a PI practice and representing their injured clients against the insurance companies and whatnot. We all know from experience that in a great majority of these cases, that until their feet are to the fire, most defense firms will not settle their case for the true value of what we know them to be. Now, that doesn't mean you may not have settled a bunch of cases and maybe even made more money during COVID than ever before. But as lawyers, we understand that there are two elements to this statute. Just because you made money does not mean that you're automatically eliminated, because if you fall within the second category, and let me be clear, in my book, if you have a litigation practice element to your law firm, you are an A+ candidate for the ERC program. Now, again, I don't have a crystal ball, and no good lawyer would say, I guarantee 100% that your law firm qualifies. I'm not saying that. But what I do tell my friends who are lawyers who have PI practices, that this is the equivalent of getting rear-ended, having a client walk in who was rear-ended by a Coca-Cola truck and the driver of the truck was driving drunk. That's how strongly I believe that litigation law firms are eligible for this program.
Yeah, I love music's my ears, but it sounds like basically the bottom line is maybe you made money, but you probably could have made a lot more if the courthouse was open. You could try your cases, but us trial lawyers, we know that, and the defense counsel, they know that also. So I wouldn't say it's a game, but that's the reality of our existence. And I mean, I think you've basically, your analysis is going to be proven to be correct.
Well, and if you think about the nature of a personal injury lawyer in particular, one or two cases can make or break the year. And how many of us have had one case that settles in December versus January, and it throws your balance sheet completely out of whack? So, you've got to be mindful of that. And just because cases are not settling or are settling during this COVID period, that's not the benchmark. The benchmark is, was your business materially impacted by a government ordered shutdown? And if you couldn't move your cases along, and I would argue that there's still a significant backlog here in South Florida and around the country when it comes to getting jury trials. Now, the courthouses were open. We got a lot of good benefits. Zoom hearings. You don't have to drive down to the courthouse, drive an hour for a 15-minute hearing. But let me be clear, hearings are very different from trials. And, doing motion practice doesn't move the needle when it comes to getting cases resolved against zealous defense lawyers.
All right. So just to clarify a couple of things. One, is there a due date? Is this program ending on a certain date? Do applications need to be filed?
There is. And that's in a very important point, because the short answer is that there's, we're talking about the 2 years that were affected by COVID being the 2020 tax year and the 2021 tax year. The due date for the ERC for 2020 is this coming April 15th of 2024.
Yeah.
Now, the more lucrative year is the 2021 tax year. And that period expires a year from this April, or April the 15th of 2025. So there is still time, but if you wait until beyond this April, you are leaving money on the floor. Not the majority of it, but there's money on the floor. Now, if I can add one more thing on that, because I had mentioned that there was this backlash by the IRS, because literally, I want to say probably since the beginning of this year, so starting in 2023, there have been out of the woodwork have come ERC firms. I got into an Uber the other day, and the Uber driver looked back at me and said, "Hey, if you're a business owner, I'm doing ERC." So that made me nervous, but rightfully so. What the IRS is taking steps to try to curb fraudulent ERC claims.
Yeah.
And when I say fraudulent, there's two elements of fraud. There's the criminal fraud, where we've all heard about the fake companies and the dummy invoices that are prepared. Those are people that are going to be going to jail. rightfully so, that are just blatantly stealing money from the government. But there's also civil fraud for those companies who, without any proper vetting, without any analysis, automatically run your case through, oftentimes take money from you up front, and then they disappear. So what the IRS has actually done, as of late, they have placed a moratorium on this ERC program while they try to get their arms around all of the bad actors and really whittle away the people who should not be doing ERC. That moratorium, as it now stands, is the end of this year. So the IRS is still processing claims that have already been submitted, but they are not processing new claims until the beginning of 2024. Now, what I tell my clients are, don't wait, because you want to be first in line, because once they start opening the reviews again, you already want to be in the queue. But what's really important is the IRS never dreamed they were going to have this many businesses claim the ERC program. And so you're hearing a lot of clamor by the IRS commissioner to eliminate this program. Now, fortunately for small businesses, the IRS can't unilaterally change the law, but they have been pushing Congress. I'm not sure what that windup is going to be, but what I would tell my clients and your listeners is that if you believe that you're eligible for this program, do it as soon as possible, because you're going to be in line already. There's already a delay, and there is a chance that Congress could change the law. So these deadlines of next April and the April after that, that could be shut down, with an act of Congress.
All right, last question in terms of logistics. Let's say I own another business besides a law firm, and I'm actually just listening to this out of curiosity. Can I hire you? Or
Sure.
you?
I mean, when I say you can hire me, the answer is absolutely. What we will do is a no charge analysis. We look at your revenue. We look at how your business was impacted due to COVID. Now, there are many lawyers who are also entrepreneurs. So in addition to running their own law practice, they might own a separate business. There's the law of aggregation, which says that if your law firm qualifies, any other business that you're a majority shareholder in automatically qualifies because of this aggregation rule, that if one of your businesses qualifies, all of the businesses you own actually qualify as well.
All right, my last question logistically here. Let's say I'm a one-person law firm, just working out of my house, doing immigration work. I don't have a secretary. Should I call you up?
Well, what I would say is that there is a threshold that in order to be eligible for this program, you must have had W-2 wages. So you had to have an employee that is unrelated to the business owner. So if it's a business where it's the father and son practicing law together and the mom is the secretary, none of those people are eligible. It's got to be unrelated W-2 employees.
I got you. All right, so we're going to leave it on that note. I'm going to tell you listeners, don't hesitate. I know you heard moratorium. I know you heard maybe the law might be changing. If you are in doubt, you want to do this, you're going to call Ted. I'm going to leave his info in the show notes. But if they want, what's the best way to reach you, Ted?
Yeah, and what I would say, again, just to leave it with your listeners, is if you have not done the ERC program and you own a law firm or you have W-2 unrelated employees, you are literally leaving tens of thousands, maybe hundreds of thousands of dollars on the table. So call me. I'm happy to explain the whole details of why I believe law firms qualify, and I will stand behind that and take your case to the Supreme Court if necessary, because when you look at the law, it's at least clear to me. So call me, Ted Forman, My website is erclawyers.com. My direct office line is 1-800-827-7731.
All right, folks, that's going to do it for the show. Ted, I want to just say a couple things about Ted. Ted not only does the ERC, but he's also a fantastic mass tort lawyer. Oftentimes I have questions in the space and I'm like, oh my God, I just call him up or whatever. And he seems to know everything. Med mal, personal injury, severe personal injury cases. And he's also a children's advocate. I love that. Ted, we hear all these stories about Uber now. So you got to be careful when you're driving and, you're in an Uber car. I guess
Well,
that's our next frontier, right?
Well, the last thing I'll leave you with is, this is the new mass tort with Uber sexual abuse, where we put our kids in an Uber thinking they're safe, and they're victim to predators who are driving these Uber cars. So think twice before you do that too.
Yeah, or the wilderness programs. That's a shocker also. But
yes,
all right.
Absolutely.
All right, listen, Ted, thanks for coming on. I got to tell you, I love whoever's doing your hair. You got to drop me a little note about who's doing the hair, because I think mine needs a little work or whatever. But anyway,
I think it's the same barber.
It might be the same barber. You son of a gun. All right, that's Ted Forman here. Again, the last thing you want to do is not listen to my mother. Okay, don't leave money on the table. It's there. Call up Ted. It's not going to cost you anything, and he'll set you straight. Maybe make you some money, and then you'll be happier. I guess. I don't know. All right, that'll do it for this episode of Cut to the Chase. Subscribe, rate, and review. Ted, you take care of yourself. All right.
Thank you.
That's all for this episode of Cut to the Chase. But before you go, will you open up your podcast app and give us a 5-star review? You can also leave a comment about what you liked most or other topics you'd like us to cover. And please be sure to subscribe so you don't miss any upcoming shows. Thanks, everybody. Be safe out there.